Uh, good afternoon, good evening, ladies and gentlemen. Welcome to this very special guest keynote that we have in this session. I'm very pleased to introduce Matt Cashia, and VP of Morgan Stanley, and Pedro Costa, MD of the Global Technology Investment Banking Group. Matt and Pedro are going to deliver a joint keynote today around achieving quantum supremacy in the public markets. Matt, the floor is yours.
Thanks, Lawrence, for the introduction. I'm going to project some slides that we're going to reference during the conversation here. Here we go. So appreciate everyone attending today. My name is Matt Cashia. I'm a Vice President in Morgan Stanley's Global Technology Investment Banking Group. Importantly, myself and Pedro Costa served as exclusive financial advisors to IonQ and their SPAC merger with BMY. Do have to caveat that given that is a pending transaction, we're not able to comment on that transaction specifically, but given it's kind of a one-of-a-kind deal, certainly would like to discuss with you some learnings that we got from that deal, as well as our thoughts on the SPAC markets and kind of implications for quantum computing companies as a whole. And I'd say that's where I'd like to spend the bulk of our time discussing the SPAC process, as well as quantum specific characteristics. But just to help set the stage, let me spend a couple minutes on the SPAC markets today and kind of how we got here. So the page that you see in front of you right now shows the SPAC front ends that we've seen over the past 10 years. I think there's two key takeaways that you get from this. The first is that even though you've heard the word SPAC a lot more over the past year or so, it's not a new path to the public markets. It's been around for 20 plus years. So we're kind of witnessing something we call a SPAC to the future phenomenon in some ways. And then the second is it's difficult to, call the top 10 market, frankly. If you look at 2020, we saw $86 billion of capital raised in 2020 full year, a phenomenal amount of issuance, record year by any way you cut it. Fast forward to 2021, in the first quarter alone, we issued $95 billion of capital in front ends. So truly a phenomenal record-breaking pace that we've seen of these front ends with SPAC sponsors going public. Flipping to page 2, this just shows the level of de-SPAC activity. And just so I'm clear, when I say front end, I mean a SPAC sponsor going public with the funds it raises from investors. De-SPACs or back ends, I mean the transaction whereby a publicly traded SPAC finds a target, signs a purchase agreement, invests in the target, and that target becomes a publicly traded entity. So as you would expect, the more SPAC front ends you see, the more SPAC back ends you will see following that. And again, we saw $233 billion of transaction value from SPACs in the first quarter of this year alone. Huge jump over 2020, which was already a record year. But the key takeaway from this, and it's really in combination of pages 2 and 3, in that while we've seen a record level of activity, we expect that record level of activity to continue at least through the next 2 years, largely because there's still $140 billion of SPAC capital trading in the markets today. And structurally, the way these SPACs work is they have 2 years to deploy that capital before they are forced to dissolve and return that capital to their shareholders. So as such, even in the absence of any further front ends, there's $140 billion of capital coming to the SPAC markets or in the SPAC markets that needs to be deployed over the next 2 years. But that's not to say these markets aren't without volatility, and that's what page 4 lays out. The left side of this page simplistically just says, okay, if I'm at the end of February and I look at the past 50 deals done, how did those deals price? And on the top box, you've got front ends. On the bottom box, you've got back ends. And at the end of February, kind of peak SPAC mania, if you will, didn't matter who you were, what you were doing, you were trading above your break-even price or your par price of $10 per share. Fast forward to March, And for many reasons, and we could spend 20 minutes just discussing the volatility in the markets and the implications that macro factors have on this. But for many reasons, public markets and buy-side investors applied more scrutiny to these transactions. But the key takeaway is, from a sponsor's perspective, to stay in the green, what we saw is during challenging times, you have to deliver some sort of value past the amount of capital that you have in your trust. So that's operational expertise, it's industry relationships, it's expertise of sitting on public companies' boards, it's relationship, aura, things of that nature, some sort of value add apart from just the money in your trust. And when it comes to the companies going public via these SPAC transactions, it's all about that specific company. Is it a Me Too SPAC where they're going public just because everybody else is? Or is it a company or a story that really resonates with buy-side investors, public market investors, that knows how to, manage as a public company, put out guidance, put out key milestones, and, meet those estimates on a quarterly basis like public companies are required to do. So with that, I'm going to hand it over to Pedro, who's going to go through quickly some SPAC process overview dynamics as well as implications for quantum computing businesses.
Yeah, thank you, Matt, and appreciate the opportunity to be presenting to you all. As Matt was mentioning, and maybe let's go to page 6, SPACs have become an engine for companies to go public. So if anything, just offers high quality companies an additional tool to become public. And what's interesting is that as we are observing the evolution of the SPAC market, is that the ability of high growth companies to go public through SPACs is a possibility. As Matt was mentioning, public company readiness is a key factor, and we'll discuss that in a couple of slides ahead. But the important aspect for the quantum computing companies is that high growth stories that benefit from forward-looking perspectives in terms of articulating the milestones of the business plan and essentially defining success into the future is important. And therefore, the ability of the SPACs to understand your future plans, your milestones, and the ability of the PIPE investors to also understand those milestones become quite critical, and that enables SPACs to become an option for companies like yourselves. So going to the next page, because there's lots of discussions about how does a SPAC timeline look in comparison to an IPO. I would say the overall process is probably commensurate on timing. It's probably around 5 months, but the tail end of 2.5 months is really regulatory nature. So the relevant most aspect is the first 10 weeks, where you need to select a SPAC, you need to conduct management presentations with the SPAC to articulate your investment thesis, articulate your positioning to the investors, your financial model. And then once you're able to have those discussions with the SPAC, your ability to define what are the criteria for a letter of intent, and defining what this is the SPAC that is the winner, that is going to essentially lock in arms with you in a partnership to raise a PIPE that becomes the critical success factor of a SPAC transaction. So that all in all takes probably 10 weeks. And the big advantage versus the IPO is that in that period, you have at least a certain amount of committed capital that enables you to have more certainty potentially on a transaction with a SPAC. And then the 2.5 months of the back tail end is really regulatory driven. So with that, we go into the next page that defines what are the key success factors for a SPAC transaction. As Matt was saying, the market has become more challenged. And with a more challenging market, certainty of a transaction becomes more important. Defining what certainty means in a SPAC transaction is important. And I would say committed capital towards a potential transaction is probably the most important variable. So you want to select the right SPAC sponsor, select the right partner for you, making sure that the potential partner has incremental capital that either comes from their own relationships, comes from forward purchase agreements, that essentially signals to the market their significant commitment to the transaction. I would say that is probably, a key variable, especially in these markets, to be focused on. I would say alignment of interests between the SPAC and the company are important. We are seeing variances on how SPACs are aligning their promotes in terms of how they make money out of a transaction together with the success of the public company. I think that's critically important and a very strong message to the market. And therefore, those are probably the most relevant aspects or criteria to take into consideration in a more challenging market. Let's take it into the next page, which is more focused into, what does that all mean for quantum companies? I would say public company readiness is it's table stakes, meaning if you are not ready to be a public company, then a potential SPAC transaction does not work. That means you need to have audits as a public company standard for the last 3 years. You need to have a management team that you feel is fully prepared to lead the public company. You need to have a board that is compatible with the public company. So all those aspects need to be taken into consideration. I would say investor relations is pretty important. Don't forget, a SPAC transaction is not an exit. It's just a way to become a public company. And you do want to have a pre-planned strategy on how you are going to position your story. You're going to articulate the investment thesis to the investor universe. And that's why, for example, the S4, which is the key filing that you would be making as part of a SPAC transaction, is important. You don't want to let that become a gatekeeper into how you announce your transaction. You want to make sure that you're working to that in advance, because the articulation of that public company story is critically important. I think the second aspect is prioritizing preparation over speed. I know there's always this anxiety, the markets are open, we should take advantage of the window. And while that is correct, I think most important is to be prepared with the markets up and down and the volatility in the SPAC world. High quality companies will always find their way. And the way for you to signal yourself as a high public company, a high quality public company, is to be able to articulate an investment thesis that is unassailable. And the way to do that is to be prepared, and therefore take advantage of spending the time to prepare all the management presentation materials, having a detailed financial model that is going to be articulated to the SPAC and PIPE investors, and therefore making sure that you're completely buttoned up before going to the market and exposing yourselves into the investor community. I think point number 3, we discussed already, the SPAC sponsor credibility is critically important. Choosing the right sponsor, especially in the quantum world. I think these are selective groups of people that are looking for high quality companies, and you should be looking for high quality sponsors, and therefore making sure that they're aligning their interests with you and committing capital to that transaction. That is certainly a superior signal of commitment and a superior signal for the market. I would say the last point is the PIPE defines the success of a transaction for the most part, and you want to make sure that you think about things like the quantum of capital that comes into the PIPE versus the minimum cash conditions as you are going into announcing a transaction. But our point of view is that you do want to test the waters in advance. You want to test your investment thesis. And many times, if you have strategic relationships, having those strategic investors becoming anchors into a potential PIPE, I think the strong signal that emerges from that leads you to success. And those strategic anchors many times have elements of commercial agreements and commercial arrangements that are mutually beneficial, and you want to take advantage of those as a way to position your company into the public markets. So that's really the prepared remarks that we have. I think there's a few potential Q&A that we would want to address, but I'll pause here, and Matt, if you monitored any Q&A that we want to address, let's take advantage of the last 5 minutes to do that.
Great, guys. A few questions from the audience. How are Morgan Stanley as an organization looking to work with quantum technology organizations? Is that something you're starting to do? Are you, or is it?
No, Absolutely. I think we are looking to the quantum world not only as investment bankers, but also as potential players and customers of the quantum universe. I think at least from the Morgan Stanley side and the people that have spent most time into the space, we're true believers that quantum is going to be a transformative technology, and therefore we want to monitor and be close to the players that are going to define this space as investment bankers, and also as a company that is interested in exploring quantum as a way to better serve our client base and better serve our business model. So we are certainly wanting to be as embedded into the quantum universe as we can.
Great. And following on from that, does Morgan Stanley at this point offer any mentoring or guidance to growing quantum companies? It's a nascent community. It's a growing community. How are you getting involved in it?
No, absolutely. We keep an active network of contacts with the quantum companies, and our goal is to become their trusted advisor and making sure that we are helping them navigate through the key milestones that will define their success. So both Matt and I are available to have discussions with quantum companies and highlight what we think are key milestones and how to define success as the business model gets defined. We are certainly still in early stages, and that's what I think it makes it so exciting to be part of these quantum universe and landscape. But given all our learning in bringing emerging technologies to market and being partners to, I would say, tech leaders, we want to use all that knowledge and learning to apply to the quantum universe, because at least from a personal standpoint, we're true believers that quantum is going to transform the world, and that's going to be a real disruptive event into the future. And we look forward to establishing those partnerships with the quantum leaders of the future.
So it's at that stage in the hype cycle where you're starting to get involved, you're starting to build those relationships.
Absolutely.
Following on from that, do you think quantum startups to scale up will be attracted to the investor community, or do you think it's too early? Do you think that we're probably still 5-10 years away from this?
No, look, I think in 5 to 10 years, there's going to be companies that are going to start establishing their leadership and are going to become pretty substantial companies if quantum computing is going to deliver on its promises. I would say we are still early stage, but I think the level of interest that we are seeing from the investment community is encouraging. And I think if people are true believers on the quantum potential, then now is the right time to become an investor. Obviously, you need to navigate and understand what do you think are the key factors to define the companies that are going to lead the quantum world and be, the successful next tech giants. But now is the time for investors to, deploy some capital, make their bets, and certainly get educated and stay close to the quantum ecosystem, which will eventually become a pretty meaningful investment thesis.
Yeah, and I would add to that. I mean, it also depends how you define the investment community, right? Assets in quantum today, the investment community means public market investors, but with a more venture capital or early stage growth mindset. If you go out 5 or 10 years into the future where, this is becoming less research and more, actual commercial applications with revenue, the investor community definition completely changes.
Great. Would you compare it then to maybe how AI and blockchain was 5 years ago? Is that a good comparison, or do you think it's very different?
I think this is going to be bigger. I think the potential use cases of what you can do with quantum is, in many aspects, comparable what classic computing has done for the economy. So, we think if quantum delivers on its promises and quantum supremacy becomes an evidence, then, this could be equivalent to an industrial revolution.
Oh, wow. That's very exciting times. Well, thank you very much, guys. If anyone wants to reach out to you, what's the best way to do it? Just on the event platform, or?
Sure, absolutely. Send us a message to the event platform that gets us to our emails, and we'll be back in touch.
Great. Pedro and Matt, thank you very much. Really appreciate your time, and audience, I hope you enjoyed it. Thank you.
Thank you. Bye.
Thank you all.
Thanks for inviting us.